What is going on, everyone? We have to talk about what Charlie Munger is doing with his Alibaba position because some people believe that he sold off a significant portion of his shares, whereas other people are believing he sold everything, all of his stake. Now, you guys will be the one to judge what he actually did because not only will we be going through recent interviews, but also recent articles where he details what's actually going on in his positioning and all that. However, before we get into that, I think it would be extremely helpful to go over some of the technicalities regarding Alibaba because I know many people are investing in this stock and it has just been tumbling down and they want to know where could it go the next day and the day after that. Okay, so before we get into the interviews and the articles, let's talk about the charts. Now, we all know that a lot of patterns have been broken. Alibaba used to be trading at around $315 per share and is now at around $97.50. Now, the psychological level of $100 is now broken. However, it is not just Alibaba that has gone through a massive sell off. And this is actually good news. And I know that sounds bizarre because in a market like this, how is anything considered good news? Well, Shopify, also another e commerce platform, I'm sure all of you guys have heard about it, right? Also going from about $1,760 to now $514.95, right? Basically $500 per share. That is a drastic change, and this one as well broke all of its indicators. In the near term, I think that the sell off is not over yet. Shopify, Alibaba, these e commerce names, I think they will decide to sell off. But I think its fate is reliant on the stock Apple, right? AAPL, and also Microsoft. And this is going to be an inevitability because if Apple or Microsoft, which are the names that I think should really be looked at right now, because all the other names have sold off a lot, and even Apple, right, going from $181 to now $153 per share. People invest in Apple because it is supposed to provide a safe return. And the new year just started, and this is nowhere near safe or nowhere near what investors were expecting heading into this year so early. So if Apple continues to sell off, and also Microsoft as well, I think, again, as I stated before, it's an inevitability that also Alibaba will sell off and also Shopify. The question is, how much longer will it take? How much longer will it take for these names to start reversing? Now, the answer to that question is going to be reliant on these new Federal Reserve meetings. If someone is seeking to find the market bottom, which is extremely difficult to do. However, to get some sort of a time approach or time frame, I think it is either going to be the end of March or beginning of April where we will see some sort of a bottom. And that also translates into Alibaba, Shopify, even Apple, and Microsoft as well, starting to reverse because Microsoft at $270 is also not normal compared to what investors were expecting heading into this year. And again, this is very early as well, right? People were expecting this later on in the year. However, it has become much more apparent that it happened way faster, okay? So as for Alibaba, the fact that it broke $100 a share is not the worst. However, again, it was psychological level broken, and now we are just going to have to wait and see what the next FOMC meeting, which I believe is on the week of March 16th, right? So we're going to have to wait and see what the Federal Reserve says, and then we can start making decisions as to where we see some macroeconomic factors, and then we can start deciding is it good to start entering or adding on to long positions. And I know since this is an Alibaba video, a lot of people want to know when is the best time to start getting into Alibaba. And so to put it in simple terms, I actually think that a lot of stocks are going to start bottoming very soon. The exact date, really, no one knows. However, if you guys want to know my opinions, and again, I'm not a financial advisor, I think it could be between now and March 18th or the end of March.
Charlie, Alibaba is a top three holding for you. It sells at a steep discount to its U.S. peers. Best comparable is Amazon, which is triple Alibaba's PE. So what discount should U.S. investors seek when buying Chinese stocks, considering the political, regulatory, and especially the ownership structure risk? Oh, and considering the fortune Berkshire made on your BYD suggestion, why doesn't Buffett buy Alibaba?
Well, Warren, like many other intelligent people, likes to invest where he's personally comfortable. And for some reason, I'm more comfortable with the Chinese than he is. That's a minor difference. But I have all kinds of places where I'm just like Warren. I have all kinds of things where I'm not comfortable, and I just don't go near them. I think an old guy is entitled to invest where he wants to invest in.
What makes you uncomfortable? What do you not?
It's okay to have some things that you just don't want to bother with.
Now, here's the article I was mentioning in the beginning. Charlie Munger defends his position and the valuation is absurdly cheap. The summary: Charlie Munger recently doubled down and defended his position in Alibaba. Today, shares of Alibaba are trading where they did 5 years ago and at a much cheaper valuation. This is true because compared to 5 years ago, Alibaba has grown tremendously. Investing in Alibaba is risky, but its valuation is incredibly cheap as the market isn't providing an ounce of respect to Alibaba's financial metrics. This is exactly what I just stated, and e-commerce and cloud are going to experience considerable growth, and Alibaba is a dominant force in these categories overseas. Now, this is the problem people are talking about, right? If Alibaba and Shopify did extremely well during when everyone had to stay at home, right? What is going to be expected with companies like Zoom, Alibaba, and also Shopify when everyone is in the outdoors? However, this author of this article is stating e-commerce and cloud are going to continue to grow. On March 3rd of 2017, shares of Alibaba closed at $103. I think the market is mispricing the concerns of Alibaba. No matter what, the market finds something not to like about Baba. And you guys will hear throughout the interviews, Charlie Munger states the same exact thing. He says that it should not be difficult for investors to find 3 to 5 companies in China that are good companies, and he states that these fears are useless because these companies are actually good. And as a matter of fact, let's go ahead and dive into the interview so that you guys can actually hear what he's been saying all along.
In January, Jeff Gundlach was quoted, "China is uninvestable, in my opinion, at this point. I've never invested in China long or short. Why is that? I don't trust the data. I don't trust the relationship between the United States and China anymore. I think that investments in China could be confiscated. I think there's a risk of that," end quote. Obviously, with a significant percentage of the Daily Journal's marketable securities invested in BYD and Alibaba, you feel differently. Please explain why you are right.
Well, of course, only the future knows who's going to be right. But China is a big modern nation. It's got this huge population and this huge modernity that's come in the last 30 years. And we invested some money in China because we could get more value in terms of the strength of the enterprise and the price of the security than we could get in the United States. Other people, including Sequoia, the leading venture capital firm in the United States, have made the same decision we have. But I'm sympathetic to Gundlach. If he's nervous, he doesn't have to join us. Different folks have different opinions. I feel about Russia the way he feels about China. I don't invest in Russia, so I can't criticize Gundlach's point of view. It's just I reach a different conclusion.
Okay. This question comes in from Bill Roberts, and he says, "Charlie, you and Warren have been making concentrated investments since the 1950s. Many of these investments have led to gains, but even more impressively, none of them have led to significant losses. As far as I can tell, neither one of you has lost more than a few percentage points of equity on any single investment. Daily Journal has recently bet a large amount of its capital on Alibaba and foreign traded stock. It's also taken on an additional $40 million in margin debt to make these investments. What makes you so sure that these investments won't lead to a substantial impairment of Daily Journal's equity capital, which would impact the company's ability to reinvest the resources needed to develop the company's software operating business?"
Well, of course, if you invest in marketable securities, you have the risk that they'll go down and you'll lose money instead of make it. But if you hold a depreciating currency, that's losing purchasing power. On balance, we prefer the risks we have to those we're avoiding, and we don't mind a tiny little bit of margin debt.
I got lots and lots of questions on Alibaba. That was the one question that I received more than any other, so I'll dig a little deeper through some of these. Someone named Vishal Patel from Toronto wrote in and said that as a Daily Journal owner, do we own local shares of Alibaba? Does that actually give us legal ownership of that business, or do we have a variable interest, and is that the same? Net, what do we own? And I did get a series of questions related to that same sort of thought.
When you buy Alibaba, you do get a sort of a derivative, but assuming there's a reasonable honor among civilized nations, that risk doesn't seem all that big to me.